Good afternoon, business students. So, a great article in the Times today about JLR and some amazing profitability. So, lots of this is to do with their globalization. We've done extensive case studies in class about their growth into China, and also this is a premium luxury brand. When you think about some of the Jaguar Land Rovers or the Range Rovers, they're up to £200,000 for a car. So we are talking possibly quite a lot of luxury here. But it's really important to understand if we think about the future profits. In the article, it talks about that now they've got to this profit level, they want to sustain it. And I just thought this would be a great opportunity to revise SWOT. And I've put a 20 marker in there as well to accompany the case study. So just as a reminder, we know that our internal strengths and weaknesses, and there's ones listed on the screen there, you can read that the same as anyone else. And we know that there are external opportunities and threats. Now, everything, as always in essays, needs to be contextualized. And if we look through, for example, I don't know, we'll choose one from each. So if we look through strengths, we've got intellectual property. So that could be the components in the car, that could be the brand, it could be, the Jaguar itself, those sorts of things. And it could be the technologies. There's a lot of tech that goes into building cars, and it could be the robots, it could be the AI that's there, it could be a number of different things. And if more robots are building cars, you've got less people making errors with those cars. So maybe productivity goes up, cost goes down, and if you can still sell your car at £200,000, then you're going to make more profit. Now that's a sort of chain of analysis that we're going to be looking for, because the hook in the question is about profitability. So you can't just repeat the word profit all the time, not if you want to break out of level 3, but you need to be thinking about how, in context, they can actually improve profitability. Okay, so think about it. So weaknesses could be things your competitors do better than you. Well, they're still a very small car company compared to the likes of BMW, Renault, and the rest of it. So maybe those massive economies of scale that another company has, maybe JLR don't have that. Okay, so you have to think about that. So we'll move on. Excuse me. So here is the question, quite a big paragraph here, I do apologise, but it sort of sets the scene, and then what you can do is you can read the case study and you can go and have a look to see if you can find some evidence for the 4 elements of SWOT analysis. So JLR reported record profits, and its goal is to maintain this success. JLR is considering strategies to increase profitability further. It has 2 potential options. Option 1 is expanding its manufacturing capacity by upgrading existing facilities. Option 2 is diversifying its product range to include a wider range of electric vehicles. Now, remember, when we talk about diversification, we instantly think of hands-off, and this is partial diversification. This isn't JLR deciding to go into manufacture underwear or something. So this is partial diversification. So don't get too excited about it being mega risky and everything else. Yes, it is different. Yes, it is a bit different than they're used to, especially with the Range Rovers. They're meant to be 4x4 off-road, remote access type of things. I'm thinking you've got nowhere to charge them up if you work on a farm, maybe. So, but we've looked at that diversifying word, and we're thinking we need to define that. We've got our 2 options. We're looking to confirm our hook, which will be in the second part of the 20 marker. Using your knowledge of SWOT, that means you must use the language of SWOT throughout your answer. Okay? And we need to make sure that we have got reasonable definitions in there. And it might not be about all 4 aspects of SWOT, because we've got diversification up here, and obviously we've got expanding its existing product range, and we could use the language of ANSOF somewhere in our answer for that one. But this one is asking you to think about SWOT. Don't get lost in ANSOF. Okay, so up here it says maintain or increase their profitability further, and down here is increase profits. So we know that this is our hook, and we'll stick a H next to that and underline it. So if I'm coming back to write my conclusion, at least I know what the conclusion needs to ensure. So we're looking for 3 areas of knowledge: diversification, basically existing product, existing market, and also to do with profitability. There's a 4th, isn't there, obviously, which is using the language of SWOT. So it's quite a complicated question, but it's a revision question, so it keeps us on our toes. So here is the cut down version of the Jaguar Land Rover case study from the Times. Lots of information, lots of numbers that you could do some cheeky calculation with if you were quick. And we've got enough information here to find 4 areas of SWOT. Pause the video, go through and find at least 1 piece of evidence for each element of SWOT. Hopefully you pause the video. So if we're thinking about it, we're thinking about our strengths, and they've got a strong brand. We know that they're a strong brand. They're a luxury vehicle. The Range Rover at 200 grand is clearly, if people are willing to pay it, they're going to charge it, aren't they? And if they weren't, then they would be cheaper. So we're thinking about the pros of this. Remember, whenever we find a strength or a weakness, we've got to find pros and cons for it, really. And we can see that this is a highly desirable, they trust the brand. And, you know, we know that this, well, we hope that this strength might translate over into diversifying into electric cars, for example. If they trust this, if it's desirable, they actually might reduce some of that risk. Remember, Ansoff will say even partial diversification can be higher risk. So we're looking for case study evidence to mitigate the risk. And thinking about the cons there, well, I'm thinking about this from the electric vehicle perspective, and it might be that actually people don't want their electric vehicles. They might want something else. It might be the Range Rover is synonymous for something that's not EVs. So they've got a very strong brand in the diesel market, for example. Will that transfer over to EVs? We'll find out. So yes, they've got high revenue growth, and we know that, best ever profits. Now, if you think about it, this indicates to investors that they're confident. This is good. So if JLR want to borrow a bucket load of cash from banks or shareholders or whoever they're going to get it from, hopefully they get it at preferential rates. Hopefully they will have a queue of people that say, we want to invest in JLR's EVs, and that might help. Now, if you think about it, the future is uncertain. We may not know what's going to happen with the economy. The economy is starting to pick up a little bit in the UK. It's still relatively slow in China, for example, where they sell a load of JLRs. So if you think about it, this is a global brand. And if we were bringing in our love of YED to this, we could be thinking about, well, how many people can afford a car for 200 grand if there's a global downturn? So it might negatively impact their revenue and their growth. If they've got to lower prices on cars to sell them and the cost of production is the same, profitability is going to be impacted per unit. Overall profitability. Thinking about innovation of their product range, and we've got that sort of thing in the case study. So the new electric Range Rover, for example, when that eventually comes out, and maybe this positions them as a leader. Yeah, for those that can afford the Range Rovers, they are loved, and maybe the electric one will be a game changer for them. As long as it's reliable, as long as it's got good range. Range Rovers, they're huge. It must be like driving a tank. Electric cars are heavy enough anyway because of the weight of the battery. How heavy are these things going to be? Well, maybe someone's going to be, they'll think about their environmental consciousness buying their 200 grand tank. I don't know. We'll see. But as we know, thinking about our love of product life cycle this time, R&D costs are going to be very expensive. They haven't even got this thing to the market yet. So how much money have they already spent on this? I don't know. But if it misses market expectations, they need an electric car in most markets. In the UK, we're going to ban selling petrol and diesel cars eventually, unless the government change their mind again. So eventually they've got to do this, or they won't be selling cars in the UK. So you have to think about this, and if it does fail to meet market expectations, as in customers don't like it, then they'll buy another. This is an opportunity. Tesla, not so long ago, was a dream of someone. Yeah, electric cars. If my students we've looked at Sir Clive Sinclair's C5. He was just 30, 40 years too early for the marketplace. Suddenly, Tesla is one of the biggest EV car companies on the planet. They came from zero to hero overnight. Just because JLR are well known and well loved at the moment doesn't mean they will be in the future. This is a massive opportunity for other companies, and it's a threat if we're using the language of SWOT to JLR. Now, if we're thinking about weaknesses, well, we've got a big dependency on a specific market. Yeah, they have, big loyal fans in certain countries, and also they are premium for most of their cars, and we can link that into economics and obviously geography when we think about targeting marketing. But they are elsewhere, obviously, and we know because they built their factory with Chery. We've clearly bored of that case study now. So the Chinese market was so important to them. We'll see how it goes. So we can focus on that cash cow market. We can hopefully get people to buy new cars every few years. So we can focus on that. And hopefully next time they buy a car, it'll be the new electric one, for example, if that was the one we're going for. I think my argument might be a little bit biased at the moment, and we've mentioned that already. So production delays and insurance costs, well, they've had problems in the past. We had a guest speaker at school who said this. I think this was JLR. It might have been another car company, but they didn't have the seats. They had to put like crates and drive the thing off the end of the production line. So if you don't have your components in the right place at the right time, very much just in time theory, then you can't actually get that car off the production line. They've had delays, increased insurance costs. All of this will erode profitability. So we need to look for SWOT opportunities and then use our understanding of creating this chain of argument towards profit. Okay, so we've got some pros of that, I suppose. They can learn from this, they can become better, therefore improve efficiency, less delays, lower the cost of production, hopefully charge the same amount of money, maximize profits. It's quite an easy formula to write it as long as you write it in context. And customers, if they're already waiting 6 months for the brand new electric car, then they don't want to wait 12. They might go and buy a different one. Okay, so those external ones, so opportunities, it is a massive opportunity because the market is growing. Because of legislation, the market is growing. Because of people being aware of the environment. Thank you, Blue Planet. Think about these things. So the pros, if we align with these customer trends, maybe people will want to buy the cars. And hopefully they're not too sensitive to price either. And remember, there are incentives still to subsidise cars, not that it's made them cheaper. Maybe the threat of competition from China will make them cheaper. Okay. Again, investment, and at the moment, the electric car market is not growing as much as they predicted, partially because the Conservatives have moved the date forward again, and partially because we haven't got enough charging points. Okay. So until the infrastructure is sorted out, we've got problems. That is definitely an external threat in some ways as well. It might be an opportunity if they can get a really long range battery. We'll see. New markets, well, they're not currently selling that much in the EV market. Their Jaguar wasn't that successful, wasn't reviewed very well. So actually, this could be a massive growth for them. But it might be that they cannibalize their sales. Remember, we talked about this with market segmentation in class yesterday, where actually those two Ferraris were in competition with each other. 50% of the market, well, of their sales, sorry. So actually, it could be people buy EVs instead of buying the other diesel one. But when the diesel's gone, let's hope that their EV is good enough. Okay, so diversifies revenue streams. We can link that into profits quite easily. And clearly, entering a new market involves a lot of marketing. Okay, just because you're successful somewhere else, Tesco's, does not mean you're going to be successful in China. I didn't make a mistake, by the way. I'm sure you know how well Tesco's did in China. So, nearly through the SWOT. Here's more examples here. There's a lot of competition out there, and I've mentioned Tesla. Lots of people look on Tesla as the industry established leader. They've been around for 5 minutes. Okay, it doesn't mean they're not a massive threat. It just shows how quickly some brands can grow when there's innovation in technology, and EVs have shook the market up. We'll see if hydrogen cars shake the market up in the future. Who's going to want an electric car if hydrogen comes out? So, intense competition, this could be good. If you're in competition with lots of other companies talking about EVs and yours just happens to be a bit sexier or better, maybe they come to you and you actually get some cross-promotional benefits from other people's advertising. Okay? The threat is, well, they might take your sales. Yes, there's regulatory changes. This is a massive threat. I'm quite confident, not that I know much because I'm a Dalmatian, that JLR wouldn't be bothering with an electric Range Rover if it wasn't for the looming doom of not being able to sell petrol or diesel engines. Okay, so those points are there for you. Now, when I was thinking about this from a strengths and weaknesses perspective, I thought about the aims that might be seen in the case study. Now, I did take this from the original Times article, so you're going to see a version of this in the bit that I've printed up here, but you can go and just download the version from the Times. It's like £10 a year for students. There's no real excuse. So, yes, we've got profits. We understand what they're trying to achieve, but also they've got to go careful about sustaining these profits over a period of time, and that will be linked to customer satisfaction, operational efficiencies, all of that. Now, we can't use abstract terms like that in our essays unless we're going to back them up. It sounds technical, it sounds efficient, but actually it's abstract use of theory. Okay, I want you to describe what operational efficiency means. I want to know that happy customers will choose to buy a JLR car over BMW. Yeah, so that's the sort of thing. And what is good customer service? Maybe it's a car that doesn't break down. Okay, and when it does, JLR sort it out. If we look through the opportunities and threats, same sort of thing. Just gone through and tried to identify some quotes to link into these SWOT factors. Okay, we know the aim of the company is to increase profits. We've already planned the question, but there's other stuff there. You've got to look for quotes. Okay, back to our question. We know that the hook is to increase our profits. Okay, we know in class, we've done this about 1,000 times, I'm either charging more for my car and my cost of production maybe doesn't change, therefore increasing profits. I'm selling a damn sight more cars, therefore overall profits. Profit margin might not change, but overall profits do. or I'm reducing my cost of production. Now, that doesn't necessarily mean going out and buying some crappy, horrible wheels or anything. It might be that they make it right first time instead of having to repair it. They might get their just-in-time system sorted so the parts are there so they're not waiting. They may not have to store cars if they're waiting, which is where the increased insurance costs came from, by the way. You know, if I'm storing £20 million worth of cars and I didn't used to, my insurance is going to go up. It's a bit obvious, really. So we know that option 1 is that, and we know that option 2 is there. Okay, we know we need to show an understanding, even if we don't define it exactly, but we're going to have to talk about these strengths, weaknesses, opportunities and threats as we go through this. This is very much an ANSOF question. However, we're going to focus on SWOT, and I've dropped ANSOF in the end of the question, in the conclusion, just to make sure I acknowledged that I understand that this is a bit of ANSOF. Okay, we're always going to start with a definition. So expanding manufacturing capacity involves improving the infrastructure, technology, equipment and current production sites to increase output and efficiency of manufacturing processes. What a load of waffle. Now, you could probably have written half of that, but the good thing about this definition in some ways is I know what I'm going to look for in the case study. Remember, I would advise that you plan your question, you write your first definition, you then go and get all of your evidence from the case study. Now, increasing manufacturing capacity by upgrading existing car factories. Just drop the word cars in there. Yeah, factory isn't in the question, cars isn't in the question, so at least we've got a bit of context straight away. Could boost production efficiency, making more cars. This could lead, obviously classic chain of argument, to reduced production costs and faster output rates. Okay, well, faster making cars maybe, we've mentioned it twice already, will be fine. A streamlined production process using advanced technologies can decrease downtime and defects, enhancing car quality. JLR's current facility upgrades have historically led to a 10% increase in workforce efficiency, leading to lower unit costs, increased profits per car. Okay, so what we've got there is a nice quote from the case study, which is obviously historically it was that, and we have linked it at the end of the chain of argument back to profitability per car. A higher initial investment, remember our pros and cons from earlier, to upgrade, this is obviously our point. The financial burden of these upgrades could strain the company's short-term liquidity. Significant capital expenditure may not yield immediate returns. This is the classic short-term versus long-term argument, impacting financial stability as seen in the previous upgrades in Wolverhampton facility, demanded substantial capital, impacting JLR's historic profits as seen in their accounts. It was mentioned in the article. Okay, so again, we've come back to the hook, it's in context, and nice little quote there obviously to make it in context, but it's an interpretation because we've got short-term versus long-term immediate returns. We're then going to talk about diversifying and make sure that we define it first. Then we would go to the case study, get our evidence. And diversifying product offerings to include more electric vehicles could be classed as diversification, with an aim to broaden the range of cars JLR sells by introducing new electric vehicles into the market, aiming to attract different customer segments. There's a few chains of argument in a very long definition. So we've got a nice chain there. We're going for level 4. We want a minimum of 5 in our 4P paragraphs here. So as long as it's contextualised, that is. And if you just want the bottom of level 4, a mere 75%, then you can get away with probably 3, as long as it's context. Diversification into electric vehicles aligns with the global market trends of environmental regulations. This is one of those external opportunities. This approach not only captures the growing market for eco-friendly vehicles, but also positions JLR as a leader in innovation within the luxury segment, potentially increasing market share. We see this in the case study, which is bringing the attention to the examiner. We'll see this in there, and I'm sort of interpreting it. As the anticipation of JLR's electric Range Rover has already generated considerable market interest, as seen in preliminary order volumes. Back to the hook, here it comes, which could result in extra profits if maintained. Here's my however. Diversification carries risks associated with market acceptance and technological uncertainties. New electric models require consumer acceptance and depend on supporting infrastructure, like the charging stations that we don't have enough of, which are not yet universally available, possibly limiting initial sales. Short-term versus long-term argument again. The case study shows, nice signposting, that challenges faced by competitors like Tesla in establishing market dominance, interesting, due to infrastructure hurdles, highlights similar risks for JLR. Need to make sure we get it back to the hook. This could impact profits if customers don't shift to EVs and JLR are left with unsold cars. And we know that's going to hit their insurance costs and stuff like that as well. Okay, back to profits. Overall, let's answer the question. Now, we've got our hook of increased profits. We need to choose one. Overall, expanding into electric vehicles is better to help JLR increase profits. Okay, so we are using the word from the question, and we have answered the question. Okay, if you agree with it or not, it doesn't matter. We've answered it. We've not sat on the fence and said a bit of both, please. This strategy not only meets the increased demand for sustainable transport solutions, but also uses JLR's strengths in innovation and brand reputation in a luxury market. What a load of crap. Yeah, purposely put that in there. That is a total repeat. Now, what we see often is students get to their conclusions and they just repeat what they've already said. You've already had the marks for it. You're not going to get the marks twice. So what you need to do is you need to focus on your justification. And justification is not just repeating what you have written. A justification is adding something a bit more. Not really another argument, but another twist. Yeah. While expanding, manufacturing capacity offers benefits. Now, before I read the rest of this, what you need to do is you need to compare to the alternative. And that's the one you didn't choose. That's the opportunity cost. The forgone option. AKA, you need to badmouth the competition. Why is the other one not quite as good? Okay? While expanding manufacturing capacity offers benefits, the market penetration strategy with changing laws regarding petrol cars, nice little drop in there, would only be profitable in the short term. The longer term product development strategy, showing off a bit of Ansoff here, would give JLR an advantage in improved market positioning provided by enhancing the electric vehicle range, promise greater returns on investment. This aligns more closely with market trends and consumer preferences which are moving towards sustainability. Again, the student has decided to repeat a point. You've already had the marks for it. Now, if this is the last 20 marker, you could have saved a couple of seconds and gone back and maybe updated something else. If this is the first 20 marker, probably over answering it, paying the price later. Okay? Now, is it level 4? I would argue it is. However, there's risks with this essay. Okay? It is definitely not perfect. Now, it is talking about internal strengths and those weaknesses and the opportunities and threats, but it is not using the language of SWOT. Okay, now I think a careful examiner would read this and they would see that you've done this. But do you want to take the risk with this type of answer? So, my advice to this student would be make sure you use the language of SWOT better. So, when we're talking about changes in laws, then we would say external threats like changes in law. You've got to use the language of SWOT, because if you don't cover the basic elements of knowledge requirements, the examiners will give you 0. Now, this does show internal versus external, but it's quite difficult to get to it. My advice is make sure you use the language of SWOT. If you're one of my students, I would encourage you to rewrite this answer, and I would like to see the language of SWOT put into the answer. Just stick it in brackets if you want to. Strengths next to the brand identity, for example. Okay? So the really popular. Yet we know that they've got Wolverhampton facilities was done before. Well, clearly they've got that strength of their offer. They understand how this return on investment panned out in the long term, okay, or the longer term. Okay, so actually not a very good answer, but we can learn a lot from not very good answers. Thank you.